Onto your markets now. Asian share markets followed Wall Street higher this morning as China's factories struggled to reopen after an extended break, though analysts warned investors might be underestimating how economically damaging the challenge was likely to be. The death toll from the coronavirus epidemic in mainland China climbed past 1,000 on Tuesday, though the number of new confirmed cases fell. China stocks were on pace for their sixth straight session of gains as sentiment was helped by a slowdown in those new coronavirus cases. Japan's Nikkei was closed for a holiday. The Hang Seng Index in Hong Kong picked up 1.2% to close out at 27,558 points. The Shanghai Composite in China picked up 0.4% to close at 2,901 index points. Over in the United States, the S&P 500 and the Nasdaq notched record closing highs last night as Chinese workers and factories slowly returned to business following a Lunar New Year holiday that was protracted by the deadly coronavirus outbreak. The Dow Jones Industrial Average rose 0.6% to 29,276 points. The S&P 500 gained 0.75% to 3,352 points. And the Nasdaq Composite added 1.1% to close at 9,628 index points. Well, for more on the market, we cross, of course, to Arabile Gumede, who's standing by for us at the JSE. Over to you, Arabile.
Yeah, so good afternoon to you, Nombumile. Look, you've pointed out some green trading out and across there with regards to the Asian market and, of course, Wall Street, more record highs. How many times have we said that, at least over the last year when it comes to the US market? Asia seemingly doing well. Of course, the Nikkei in Japan still out for that holiday, bound to get some positivity as it filters through into trade as well soon. So the coronavirus still impacting the market and how things are faring there. As you said, more than 1,000 deaths, unfortunately, with regards to that. More than 13 cases as well out in the United States. So that certainly does worry the market quite a bit. However, the case of new coronavirus cases does seem to be coming down ever so slightly. So perhaps some containment, perhaps some relief coming through with regards to the market as well. A little more buoyancy from that front. We are seeing some stimulus as well from Asia, which is beginning to infiltrate the market and perhaps bring in that sense of positivity as well. Even the equity market out in the US enjoying some of that stimulus which has been pumped into the Chinese economy. On the global front, well, the rest of the world has had to catch the cold, unfortunately, and we have sat in the red for a little bit of time, but we are getting somewhat of a rebound, if you want to call it that, around 0.2% up for the JSE All Share, and much of the market is seemingly trying to gather up some positivity. Let's see just how much in these numbers, and we'll get into the details right after this. So as you can see, some positivity across most of those market spaces and some of those indices as well. The commodities continuing to find some sort of joy, even though the platinum price does sit below that $1,000 a fine ounce mark, which it hit a little earlier this year. Let's chat now to Edgar Mafoko, who is from FNB Wealth and Investment, who joins us here at the Johannesburg Stock Exchange. Edgar, thank you so much for the time. I appreciate it. On a general sense, are we finding some sense of positivity? Is the coronavirus perhaps still top news at this point?
Yeah, the coronavirus basically at the top of every conversation around the markets at the moment. And I think you also mentioned U.S. markets trading at a record high.
Yeah.
We're nowhere near record highs. Local stocks continue to underperform. And I think everyone's eagerly awaiting the State of the Nation address with regards to whether will we get reforms around ESCOM, SAA. So there's still a lot of question marks around the local economy, and I think that's why you're seeing local stocks remaining under check.
Yeah.
But if we do have the offshore exposure rather, that's doing well for you at the moment.
Sure. There's as you said, this big difference though in the record highs you're seeing out in the US. South Africa's market not seemingly going with the rest of the world. Yes, we've spoken about how we've decoupled on the growth side. Are we decoupling on the market side too?
I think we definitely are decoupling, and I think you mentioned the likes of Naspers. Even though Naspers makes such a heavy weighting on our index, but if you look at the banks, for example, will also make a very large chunk of our market. And I think given that the locals haven't performed, it has led to this decoupling that you've seen in the markets. But I think definitely everyone's just waiting for the State of the Nation address, and I think the budget after that to see where the country's at the moment. But I think if you look at a lot of the consensus that is out there is that things are not looking good for us, and I think things could have deteriorated further from the medium-term budget. So I think investors definitely eagerly awaiting the budget, and I think depending on how that goes, we might get a bit of a relief rally rather in local markets, or we could go further south.
Oh boy, we certainly hope it goes the other way, really. If we keep with that economic picture, unemployment numbers came out today, 29.1%. 108,000 jobs, though, on a year-on-year basis compared to a year ago. Yes, over the last decade, we grew jobs by around 2.4 million. So that is a good sense in that way. But having grown the South Africa's population by a whole lot more than that in the time, it's still not boding well. I mean, we have probably one of the highest unemployment rates globally.
That is the problem. I think, if you do have population growth outstripping GDP growth, you are going to end up in this sort of, scenario. But I think, like I say, I think that's why everyone's eagerly awaiting the budget, to see, what tough choices are we going to be making. Because I think with the course that we are on now, things are going to get definitely a bit more difficult for us until we start seeing at least 2% GDP growth, which is what you're seeing as growth in the population numbers look like at the moment.
Cheap is unbelievable. All right, let's get into the equity space then. Harmony Gold releasing some interim numbers today. A massive around, what was it, 6,200 odd % in the climb in their headline earnings per share, their revenue going up more than 9% or so. It was a good picture for them in the interim period.
I think you've seen this with a lot of the miners. A lot of these companies were heavily loss-making not too long ago, and I think with this rebound that you've seen in gold, with the likes of your Anglo Gold, you mentioned Harmony as well, platinum miners as well. You're seeing these numbers with earnings up 1,000%, 10,000%. But yes, it is a function of a recovery in commodity prices. I think gold has really led the way for us, but I think you've also seen strong gains in palladium as well. But I think, going back to Harmony, I think a very good result for them. But costs, don't look contained at the moment, which is a big worry for them. But, then again, you've got a lot of mines that are at the end of their life cycles. And I think that's why you could potentially see them, trying to go for Anglo Gold's mines that they are looking to get out of, which would be a good deal for them.
Is it still a sunset industry, particularly in South Africa?
I think if you look at the mining production numbers that we are getting, it doesn't look good for the sector at all. But I think, nevertheless, I think this welcome rally in gold will be good for the sector. And I think, funny enough, for the long time, mining has been one of the underperformers in the economy. But I think over the last 2 years, they have turned the story a bit for us. And I think, let's enjoy this rally while it lasts. But I think for mining, gold mining in general, I think definitely sunset for them.
What are your clients sort of looking towards, though, in terms of growth areas, in terms of areas they're perhaps looking to get into right now, considering that as you said, gold hasn't really shone too bright. Yes, the price is going up now, but that's really more a function of less supply than it is more just the demand issue, I suppose. Pretty much the same with platinum and the palladium space, I suppose, is slightly different. But what would you sort of get into now? Financials not necessarily doing too well. Industrial seemingly suffering as well. What are clients sort of looking at right now?
I think with US markets at a record high, the conversation is actually a bit more difficult than it was a year ago. Because, do you take more money offshore? But I think you've got to be very selective, and I think you've got to look for value. You've got to look for companies with very strong, balance sheets. And I think with the offshore side, as much as, yes, we do want to add to offshore, you want to look at something that hasn't rallied as much as the market has done over the last few years. And I think you want a good dividend-paying stocks as well, given that we're at the top of the cycle with regards to the equities markets offshore. And I think locally the conversation is actually even more difficult because you've got an underperforming economy. So should you be invested locally in the first place? But the big hope for us is that, the economy does turn around.
Yeah.
It might not happen in the next, few months, but I think from 2 years out, the picture does look a bit more attractive. And that's where you want to look at some of the banks that are looking attractive at the moment.
Sure.
You want to look at some of the property counters that are looking attractive at the moment. So overall, tough times come and tough times go in the markets. You just got to be selective about what you're buying into, and you got to look at valuations at this point in time and go for something that looks extremely attractive.
Yeah, I do have to ask you very finally, unfortunately, we have run out of time though, but just with regards to the electricity space, Eskom not necessarily getting the increase it wants from NERSA, how much impact do you think that will have on just the structure of Eskom from here on in, and how much fear that puts into, clients' minds right now who may want to continue investing in South Africa?
It's a difficult one because I think while it's a win for the consumer, it doesn't bode well for Eskom itself. But I think what it means is they've got to make some tough decisions, unfortunately. And I think if there is a restructure that's meant to happen, I think it just means that it's got to happen much, much earlier than expected, given that, they're not getting what they expected with the tariffs. But I think, yes, it does make the local investment case a bit more difficult than it already is at the moment. But I think that's why I say, the State of the Nation address is going to be key. And the budget's also going to be key. So I think we're going to look out for those and see whether there's anything concrete that comes out around Eskom and SAA, for example.
Edgar, appreciate the time. Thank you so much for that. Edgar Mafoko is Portfolio Manager at FNB Wealth and Investments. They're joining us as we unpack that market picture here at the Johannesburg Stock Exchange. A slight uptick for the JSE All Share. Whether that continues to be the case, we'll see, of course, a little bit later on, around 1488 or so for the South African currency against the US dollar. That is where the buck stops this afternoon. My colleague Nompumelelo